Hello and welcome back, and in this video we're going to talk about creative financing. Creative financing. See guys, this misbelief that's in the industry that you must go to the bank and a bank only to get financing for your fix and flip properties or for your properties that you're going to hold for cash flow. And that's simply not true. You have creative financing such as hard money lending, private money lending. You have your IRA accounts that you can use to actually invest in real estate. You have angel investors, that's private people in the community that's called angel investors that invest in startup companies. And then you also have contract for deeds, and in Louisiana we call it bond for deeds, and there's some other creative financing tools as well. But I just want to kind of focus on some of these real quick. So let's start off with hard money. What is hard money financing? Hard money financing is basically a legal entity that was created, and individuals like you and I who are sick and tired of low returns at the bank decided to say, listen, I don't want stocks and bonds and mutual funds and getting, a CD getting 2 to 3% interest, and my money's tied up there 6 months, 2 years, etc. I want to place my money in this entity that I could get 10% rate of return, maybe 12% rate of return, and my money is backed by real estate. And so they actually take that money, they pull these funds together, millions and millions of dollars, and they lend to investors like yourself, and that's the way you're able to use OPM. Now, the benefit to that is that when you go to the bank is looking for a 700 plus credit score, they want experience, they want a good debt to income ratio, about 42%, 43%. They're not gonna lend you on multiple properties at the same time. They're going to want to see your tax return, they're going to see your profit and loss statement, they're going to see the W-2, they're going to want blood, they're going to want, you get the point, right? But from the hard money lender standpoint, they're more of an asset-based lender, meaning that they're looking mostly at that deal, right? So they're not looking for your tax returns, they don't ask for it, they don't ask for profit and loss statements. They just simply want a credit score at least 600, 620, right? With no bankruptcies and foreclosures in the last couple of years, that just makes sense, right? So they just want to see a pattern on your credit report that you are pretty good, right? But you don't need a 700 credit score. So now it's limited documents that they ask for, but they only lend 70% of the after repair value, or the ARV. So the ARV means after repair value. So whatever that property could sell for after its repair, they're only going to lend you 70% of that. So now they're protected by a tangible asset called real estate. With a stock and bond and mutual fund, there's nothing tangible that they're backed by. But when they invest in entrepreneurs like you who are investors, then they know their money is safe. So once you have that money, you're leveraging other people's money, OPM. Now once you rehab the property, you sell it, they get paid back after you sell a property. They get their principal back that they put out, and plus they get their interest back. So now they become your partner. So that's the benefit of hard money. We have a team of hard money lenders that can help you. So if you need hard money lender, let us know. If you're new, typically we have a product for you that you want to put 10% down on both the purchase and the rehab costs, right? If you are a seasoned investor, at least one fix and flip property in the last 24 months, then we have another product that you can only put 20% down of the purchase price, and we can fund 100% of that construction cost or that rehab budget. So that's huge, guys. So just know we have that access. If you need funding, you can visit fundmyrealestatedeal.com or simply just give us a call. One of the links is going to be below in this video. So having said, let's talk about private money. Private money is individuals from family members, friends, colleagues, and people that you know that do not want their money in the bank either. They want to be passive investors, and they're willing to give you the cash that you need, right? It could be the whole amount to purchase the price and rehab it, or it could be just the down payment you need to bring to the table when you're getting the hard money loan, right? So some of your private investors might want to be passive, or they might want to be active. If they're going to be active investors, they probably want to be an equity partner in your deal, but that's fine. If you're not using your own cash or your own credit, then give them a piece of the equity. Let them be equity partners. Your returns is infinite when you get your paycheck at the end when you sell a property, because you don't have no cash in it, right? So you want to have the mindset of leverage. Have the mindset of leverage. So again, that's private people. You can offer them a good rate of return, more than what the bank gonna offer. You can offer them 8% rate of return, 10% rate of return, whatever you feel comfortable with, whatever y'all agree upon, right? Make that deal happen. Next, we want to talk about angel investors. Angel investors are wealthy people that's in your communities that you don't even know that they're wealthy, and of course, they don't want their money tied up in the bank. They rather lend to startup companies, but usually the angel investors are equity-based investors or equity partners, which means they want a chunk of that deal, which is fine because again, they're gonna put up the cash. Your profits is infinite, your rate of return is infinite because you don't have any cash burn. So that's your angel investor. There are in the area, just type in Google angel investors in your city, whatever your city name is. Now we want to talk about contract for deed or bond for deed. What that simply means is that a contract for deed is what other states use, the terminology. Bond for deed is what Louisiana used for, I don't know why, but that's what Louisiana used. So what that simply means is that that seller will actually be the bank. They will be the mortgage company. So they'll say, listen, you can have my home, you can move into it, I will sell it to you. I want 10%, let's say $10,000 down. So you come to the table, you go to a closing at the attorney, at the title settlement company. You don't deal with them directly. The title company going to research the title, make sure it's a clear title, right? Make sure all the paperwork in order, and then you give the money, the down payment to the title company. The title company will disperse that fund to the seller. So now you put your down payment down like you do a normal house, right? You got your down payment down, and then your agreement is that, hey, you're going to pay X amount of dollars a month. So let's say you're going to pay $1,200 a month. So now the $1,200 a month that you actually pay, as you live in that house over the years and equity is created, the equity is yours as the buyer. It's not the seller's equity anymore. You have ownership of the equity, right? So anything happened to the house, whether the toilet is overflowing, etc., in the maintenance, you're responsible for it because it's your house. The only thing that did not happen is that the title didn't transfer yet into your name because why? You haven't paid the property off all the way. But you have all the benefit of home ownership. They don't look at the credit scores. Most of them don't look at the credit score. Most of them don't look at your bank statement. They don't care about it. They only need you moving in my house. You got the $10,000 to put down. You can spend $1,200 a month. Great, you're in, right? So now you have a house that you can decorate yourself, that you could call yours. So that's the benefit to you. The benefit to the seller is that sometimes they can charge a higher fee for the house. So on the market, for the appraisal to come in, they might only charge $150, but they might charge you $160 because they don't need the appraisal. So they get a higher amount for the house, they get a down payment from you up front, and now they're cash flowing every month. So their mortgage note might be $600 a month or $500 a month. You're paying $1,200 a month, so they're cash flowing month after month. And remember, you're the one responsibility, you have the responsibility for any maintenance in that home. So that means if the toilet overflows or a light bulb needs to be changed, you don't call the seller. They're not your landlord. They are the bank. So it relieves them any duties of maintenance or anything going on in the house. So that's the benefit to the seller, and there's a lot more details that I can compare as well. But I just want to give you a quick overview of contract for deed. On Louisiana, it's called bond for deed, right? But it have to be structured a certain way. So you want to find a title settlement company or attorney that specializes in bond for deeds or contract for deeds. So we talked about hard money, we talked about private money, we talked about angel investors, we talked about the bond for deed. So now let's talk about the IRAs, right? Your retirement account. Did you know that you can simply invest in real estate using your current retirement account, right? You don't just have to use your retirement account to invest in stocks and bonds and mutual fund or paper assets, if you will. You can actually find a custodian called a self-directed IRA. That self-directed IRA custodian will roll your money over from the custodian that you currently have into this self-directed IRA with no penalties involved. So when you roll this money over, now you have this money you can either invest in gold and silver and oil, or you can invest in real estate. That's something tangible. Now keep in mind, when you actually invest your IRA into the real estate, when the house is sold, the real estate, the money that you put it into the house to close it goes back to the IRA. It don't go to you personally. The profits that you earn go back to the IRA. It doesn't go to you personally, but it helps you to build your IRA quicker, faster, and easier. Now, if you're going to hold that property from cash flow, then that's a different animal, right? So now you can refinance, and that money goes back into your IRA that you pulled out. The money that you put in after the refinance, that money go back, and any interest you want to pay back, you pay it back. But now you got an asset that's cash flowing month after month, right? Now you better cash flow on that thing. So those are some creative financing tools that you can use, right? And so to kind of give you a story or example before I close this training video up, I'll share with you what I've done in the past and what I still do. So our goal is to create a large investment group, which we've done already, right? So in our investment group, when we find motivated sellers, we have a system in place to better find those motivated sellers, and you'll have access to it. That's coming up if you haven't seen it yet. And so now the motivated sellers are calling, they're emailing us, they're texting us, etc. So now when we find that deal, we evaluate that deal to make sure that we can make money. We want to make sure we know the after repair value, what that property can actually sell for after it's repaired. We want to know the days on market, how many days that property is going to stay on market, right? And as long as those criteria is met well, so now we move forward and we close it. We know our rehab budget. We got a system in place to making sure that we buying the property right, we finishing the project on time and in budget, and a system in place to making sure we sell that property to the end buyer, right? And one of the systems that we got in place is having credit-worthy individuals. So we have a department of credit educators and credit restorations that we able to help restore people credit. So we just filling people up in a pipeline all across the country, right? And we put them in the pipeline. They got 500 credit scores, they got low 600, and we building up their credit scores. So now in the next 3 to 6 months, they're popping out credit worthy. So now we have buyers lined up to buy the properties that we rehab. That's a whole nother topic, but just know that we have that program in place that can help you to build your pipeline of motivated, qualified, credit-worthy buyers, right? So we'll talk about that. I may even drop a link at the bottom of this video. So having said that, guys, now you're in the mode where you found the properties, you fixed it and you flipped it, and so now all you holding it for cash flow, right? So now what you want to do is have that cash that you have and utilize that to do something else with your own personal money, right? So in other words, you have the hard money lender that's going to come down and lend you 80%, right? Or maybe 90%, right? You're going to put down 10% or 20%, but instead of using your own money, what if you could bring in a private investor in and say, listen, I need $15,000 to close this deal. I need $20,000 to close this deal, right? So you could get the $15,000 from them, $20,000 from them, give them an equity position in a property, or give them a rate of return that you all agree upon, 8%, 10%, 12, 15%, whatever that looks like for you guys. So now at the table, the private seller won't give you the money. They're gonna wire in the money to the title settlement company, that attorney. That have them wire the money in, so when you go to closing, the hard money lender then wire the money in for you, the private money then wire the money in for you. So now you're signing documents, you're in control of the property, you don't have any cash involved, and then hopefully if you structure the deal correctly, now you can even have money to actually start the rehab, right? So now, let's say you needed $15,000 to close, but your private lender wired in $20,000. So $15,000 gonna go to the closing and pay everything off, but the $5,000 gonna come to you to start your rehab, to start to get your permits, get the dumpster out there, start to doing your demos, etc. Does that make sense, guys? So now at the end, when the property is sold, guess what happens? The hard money lender get paid off at the table. The title company gonna cut them their check, all right? The private money lender is going to cut a check at the table, right? They're not going to give you their money. You put them on a HUD and pay them directly. So now they get their money back, the private money. The hard money lender get their money back, and now you get a check for the remaining net pre-tax profits. That makes sense? So again, your rate of return is infinite. Now, what if you could do that 3 or 4 times? What if you could create a brand? What if you could be a subject matter expert in your community? Well, now you're showing investors day in and day out, doing meetings with them one-on-one, doing group meetings, and you're sharing with them, hey, listen, this is what we got going on, right? We have a large group of investors we building. If you guys are part of our social cause, Project 5000, we're in the mode of providing 5,000 people a financial education that's affordable and attainable, a real estate education that's affordable and attainable to 5,000 people across the country. So now this 5,000 people have high credit scores because we had them in the pipeline. We restored their credit for them. We assist them in talking to the credit bureaus, and we assist them in in erasing erroneous items, inaccurate items, unverifiable items. We assist them in that matter. We assist them in adding positive credit trade lines to their account so their credit scores is high, their debt to income ratios are perfect, they got some cash to put down to their savings, right? We're doing like a seller concession where we actually giving back to that buyer, helping them. We actually paying for their closing costs, right? Stuff like that. So we got these strategies in place that you're talking to your investors about, talking about the social costs. Hey, I'm part of Project 5000, right? And so now when investors see that vision, you're not talking to them where you at today. You're talking to the investor of the vision of where you're going. Hey, this is the direction we're going. We're going to provide 20 houses over the next 12 months, right, etc. Whatever your goal, your vision is. So now the investor is buying into that. They see where you're going. They feel the energy that you're putting forth. They actually believe you because your beliefs is so strong because you worked on yourself, right? You got a subconscious new program, that's belief system that's in you. So now that's starting to, when you articulate this to your investor, now they buy into your vision, right? So now you're attracting the right investors, you're attracting the right private money guys, your right partners into your business. So now all of a sudden, if you're in Austin, you're in Houston, you're in Dallas, you're in Atlanta, you're in Miami, you're in New Orleans, you're in Chicago, you're in Indianapolis, wherever, San Diego, wherever you at, right? We want to build you up. And that's the whole purpose of these videos, is to give you the skill set, the knowledge, the tool, the resource, get you in this mastermind group. So now in that particular city where you at, you become that go-to investor. So now people is going to be giving you and willing to offer you their money. Guys, I can't tell you how many phone calls we get and say, listen, Randy, I see what you guys are doing. I love what you're doing. I want to be involved. How can I be involved? Great. Sounds good. I sit down with them, show them our systems, our strategies, share the vision where we're going, and they got the money ready to go. So now all I got to do is go find properties from motivated sellers that make sense. So I find those motivated sellers, I evaluate the deals, the numbers make sense. Hey, listen, I got a deal for you. I shoot it over to them via email, and I'm going to teach you that in another video, how to package up a wholesale deal, how to package up the deal, right? What to put in the email, what paperwork that you need, right? What verbiage you need, etc. And then we send this off to the investor. They evaluate it. If it makes sense to them and make their approval, boom, we sign a quick joint venture agreement or a promissory note. Boom, we get the hard money in place. Or if they're gonna fund the whole deal as a private lender, we get the title pulled, make sure there's no liens on it, and we go to the table and we close, guys. So imagine for a moment if you could be flipping 5 or 6 deals at one time. What if you can do that? How fast can you get out of debt? How fast can you lower your living expenses? How fast can you create wealth for you and your family? So that's the purpose of why I do what I do, because I want to help you to be successful. Because we have the vetted vendors, the resources and tools to help you. We have the hard money in place. Just contact us. We have the credit restoration in place. Just contact us. We have the financial education services and tools. Just contact us. We have everything in place to help you to be that subject matter experts in your area. And if you need a one-on-one mentor, we can help you with that as well, right? So guys, I hope that information has been helpful. I hope you learned something. I hope you took some copious notes. Now it's time for you to go and implement these strategies that I shared with you. So guys, in the next video, I'll see you over the top, or I'll see you at the top, or I'll see you from the top. Take care.